This is China's Luckin Coffee, and here's your favorite Starbucks coffee. And can you guess what they both have in common? Nothing. These two coffee chains have been close rivals for a long time. The fight is never-ending. Luckin Coffee, for example, has filed several antitrust lawsuits against Starbucks Corporation, accusing it of unfair monopoly, which goes against Chinese antitrust laws. But the entire story gets exciting. As Starbucks continues to wax stronger, Luckin Coffee is in a deep financial scandal. Among the many alleged accounting frauds that have rocked the global financial market, the Luckin Coffee Company is one that stands out. Its high-pressure marketing techniques and its questionable accounting methods are causing major headaches for its stockholders and investors. As the company attempts to turn around, a boardroom feud that could lead to a flood is likely. During the last 2 years, Luckin Coffee has been accused of accounting fraud. The company went public in May 2019 with a U.S. initial share price of $17. Unfortunately, the coffee brand has been in legal trouble since. The U.S. Securities and Exchange Commission (SEC) has charged the company with fabricating financial statements. It's alleged that the firm's senior management fabricated financial performance to make it appear as if Luckin was successful. According to the SEC, Luckin inflated sales and expenses. The fraud was discovered during the company's annual external audit of financial statements. During the period between June and September of 2019, employees at the company intentionally overstated revenue and expense numbers. According to the SEC, the company's senior management failed to maintain reliable financial statements and internal controls. It also allegedly conspired with third-party shell companies. The company also allegedly altered its bank records. During its investigation, investigators gathered over 25,000 receipts from customers. They also recorded a video of some of the transactions. Despite a tumultuous year, Chinese companies that trade on U.S. exchanges have managed to sidestep Sarbanes-Oxley requirements. The latest example is Luckin Coffee Inc., which is a Chinese coffee chain that competes with Starbucks in the international marketplace. The company was investigated by the U.S. Securities and Exchange Commission (SEC) and fined a whopping $180 million. According to the SEC, the company materially misstated revenue and net operating losses and fabricated sales figures. During a separate investigation, the China Securities Regulatory Commission (CSRC) slapped Luckin with a $9 million fine. This is not the only time that a Chinese firm has received a smackdown from the SEC. Other examples include Chinese internet giants Didi Chuxing and Alibaba. Luckin Coffee was briefly delisted from the Nasdaq in June 2020 after it was found that the company had cheated its investors. Despite the fact that Luckin Coffee is undergoing a business turnaround in China, there is still a lot of uncertainty surrounding its future. The company has been in the news since it was exposed to an accounting scandal. According to the report, the company has been fraudulently inflating its sales numbers for years. The report, which was published by San Francisco-based shirt seller Muddy Waters Research, analyzed thousands of hours of store traffic video and concluded that Luckin has been inflating its figures since it went public. The report said that about $310 million of Luckin's sales were fraudulent in the past 3 quarters. The company also admitted that its average monthly transacting customers were 35% higher in the first half of the year than in the same period last year. The company has reshuffled its management team and has even paid off some of its regulatory fines, but it has yet to see any profits in turbulent times. Luckin Coffee announced a settlement to the shareholders of the company. The deal settles all claims in the case. This means the company will be able to focus on its business instead of defending itself against lawsuits. The settlement includes a $175 million payment to the company's shareholders and officials. The settlement also involves a $180 million penalty, This may be reduced by payments the company makes to security holders in the Cayman Islands. Luckin has agreed to pay a fine of $180 million. The company also agreed to settle U.S. charges, including the civil penalty. The settlement is subject to court approval. Luckin Coffee has been accused of creating fake sales transactions and inflating its revenue. The investigation found that the company inflated its expenses by more than $190 million. Luckin has also been accused of fraudulently inflating its share price. During the company's time on the exchange, its shares climbed to $50 per share. But since then, they have plummeted by 93%. The SEC filed the case in the Southern District of New York, alleging that the company violated federal securities laws. The lead plaintiffs include several pension funds. These funds are seeking to receive 25% of the company's settlement fund. The settlement has been approved by U.S. courts. The case was heard on Friday, July 22, 2022 at 11 a.m. Eastern Time. The attorneys for the class action law firms said the settlement was excellent. They are requesting a quarter of the $175 million. The good news is that Luckin Coffee is making a comeback. In fact, it's back and bigger than Starbucks in China. It reported positive net profits in the first half of this year and added a total of 7,195 stores in June.